Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Good morning.
Starting another day. And, it's almost as if it's one of those sessions where the previous night's action does not matter because what happens in the next 48 hours could be pivotal, right?
Yeah.
Yes.
All of it could change. Let me just quickly tell you what is the change we're talking about. So today, we get the U.S. consumer price inflation numbers out of the U.S. And then tomorrow, this is, of course, U.S. time. So FOMC, we will react to on Thursday morning. So CPI today, and based on that, I think market expectations of, maybe the quantum of rate increase, but definitely the commentary from Fed chair will change. So I think this is extremely important. Markets overnight rallied, and I think that may provide a little bit of support. S&P was up 1.5%. NASDAQ was up about 1.2%. There was, I think the New York Fed inflation survey which came through, and across time frames, this is conducted in November, across time frames, 1 year, 3 year, 5 year, inflation expectations have fallen. And I think that is what the data came through mid-afternoon or so in the US session, and markets spiked after that. But, these are inflation expectation surveys, and we get the big CPI number today. And that's why I said, this is, of course, good, but you need more. Just a quick word on the CPI itself. I think the market is positioned to say that, numbers are going to be soft. Inflation has peaked out. Inflation will come off. And I think if the CPI number comes in line with expectations, I think that narrative will get stronger. If it is a big miss, I think, you will see some very lively price action. But if it's a overshoot, like, for example, what the producer price index on Friday showed, I think then you will get some fireworks as well. But the market is going in believing that we will get a softer print. I think that is the basic assumption. You got the U.S. Treasuries, which were up a little bit, 2 basis points in the 10-year. The dollar was stronger. Oil spiked up a little bit as well. Brent is now closer to 78. We'll talk more about oil in a bit with Manisha. Nifty yesterday closed just under the 20-day moving average. That is at 18,504 after yesterday's close, and we were just under it. Friday's high, if you get a bit of a bounce, Friday's high of 18,665 becomes the first level to take out. That is about 100 points away from where we are right now. That's the Nifty. But for the banks, that's the stronger part of the market. Actually, the bank Nifty has had 10 straight positive weekly closes. If we close higher week on week, it's going to be the 11th. it has got to count for some sort of a record. But it's also true that intermarket divergences between what the Nifty is doing and the bank Nifty, that is, it doesn't, it's increasing, but it cannot last beyond a point. So something's got to give. Either the market breaks away, runs higher into the close of the year, or the banks maybe take a bit of a pause. But for now, banks are the stronger part of the market. 43,440 is the initial level on the bank Nifty if you get any signs of reversals, any signs of weakness, etc. So far, we haven't seen any. Even yesterday, we did not get a negative close. We got a positive, mildly positive higher start. Sonia, hi. Nigel, hi.
Hi, morning. And it's also just about 10 days left for Christmas Eve, right? So come on, there's so much cheer building up. I don't know about you, but if you go out there on the streets, people are putting up their Christmas trees. There are lights across the board.
Before walking in, I was just asking Nigel, where do you get the best plum cake in Bombay? It's one of my favorites. And,
is it? I'll arrange it.
I'll
with a little bit of rum.
And
not little bit. You can be generous.
And I'm sure our viewers don't know this, but Nigel every year very graciously treats us to lovely Christmas treats. So I'm waiting for that specifically.
Marzipan will be here soon.
Okay, that's my favorite. But for the market, right, there is this positive cheer that has spread, and you can see it both in the local as well as in the global cues. So the SGX Nifty, as we said, is up almost 30 odd points. For the local cues, the retail inflation came as a big surprise yesterday. It's hit that 11-month low of 5.88%. It's important because it's finally below the RBI's target after 10 whole months. So the RBI had a 6% target and now it's below that. What this does is provide some comfort to the RBI's policy setting and interest rate framework. So maybe it won't need to be as aggressive in terms of rate hike. So that's a positive, definitely. The other thing, of course, is that the global markets recouped their losses. The Dow was up about 500 points. And what I also liked is that the FII selling has reduced substantially. So from an average of around 1,000 odd crores or so in the last many trading sessions, the FII selling is barely 130 crores. So that's another, green tick for our own markets. Month to date, the FIIs have still sold a large chunk, but thankfully yesterday the selling has come off, so it's good for the bulls. DI buying continues to come in thick and fast. Now, for our own markets, the range has been about 18,400 to 18,800. We are at the lower end of that range. Purely for today, the markets will definitely open in the green. But let's see, we'll take it from there. There are a lot of things that, you need to watch out for. So there's the Paytm buyback board meet that takes place today. That's important. Colgate will be in focus. There's the first analyst meet with the new CEO, Prabha Narasimhan, that takes place today. And she's come from HUL. So, that would be important as well. And there's Landmark Cars, which is the premium auto dealer. The IPO opens today. So we have plenty to track. But Nigel, what are you looking at?
Well, yesterday was an easier day actually for the bulls than today, because yesterday you got a bit of a dip. Today, unfortunately or fortunately, the SGX Nifty suggesting a bit of a gap up. Yesterday, there was a very good session actually for the bulls, and the previous plate should come up for you because the Nifty was more or less flattish and we recovered from the day's low. But the bigger positive is the breadth of the market was good. Both the small cap and the mid cap indices, they did pretty well in yesterday's session. On the Nifty itself, there appears there was some short covering that took place because the Nifty from the lows did recover and the open interest went lower. On the Nifty Bank, well, there was some long addition that we saw. Moving to the FNOQs and what the FIs did, well, they covered close to around 6,000 short contracts. They continue to remain net long with their positioning at close to around 60%. But for me, the positive is they wrote puts. And they wrote puts aggressively yesterday. Close to around 80,000 contracts were written in trade. And what were they writing? Well, the short covering was only on the Nifty futures. But they also wrote the Nifty Bank puts, which is pretty good news. So the Nifty Bank at 18,400 as well as the 18,300 put, both of them were very active. And, on the Nifty Bank, the 43,700 as well as the 43,500 put were very active. So between them, they added close to 20 lakh shares. That's giving you a sense that support is at around that 43,400 odd mark, just going by the options data. On the Nifty, 18,400, as I said, that saw a good amount of open interest build up. And even when the markets were virtually at the day's low, you didn't make any money if you bought that strike. That told you that there was writing out there. The 18,300 put, there was a mix of action out there. There was some buying, there was a fair bit of writing as well out there. However, on the upside, 18,500 call saw some writing. The premium's around 100 rupees. So you add 18,500 plus around 100 points odd. 18,600 becomes a resistance. Yesterday's low becomes a bit of a support zone. Don't chase the opening is, probably the better way to play it. Wait for the intraday dip, as has been the case for the last many days. And then, in fact, look to get in, maybe at around, 50-point downtick or so. 35 points for starters as of now.
Okay, and the market could perhaps be in wait and watch mode. There's the US CPI data that comes out later today. There's the Fed meeting. Fed is expected to raise rates by 50 basis points, so lots of action to track. In the meantime, let's get you some market opinion as we kickstart trade this morning. First up on the equity front, we have Katie Huberty of Morgan Stanley, who says that their US equity strategists have long argued that they face high risks of an earnings recession. She says their year-end 2023 S&P 500 price target of 3,900 is not far from current levels, but they do not expect it to be a smooth ride. She also says they remain highly convinced that 2023 bottom-up consensus earnings forecasts are materially too high, but mainly attributable to overly optimistic expectations for margin growth. Katie says Morgan Stanley's US equity strategists believe that the market will discount downside to 2023 earnings sometime in Q1 of 2023 via a 3,000 to 3,500 trough for the S&P 500.
Okay, some money market views now. Bhaskar Panda of HDFC Bank says downward pressure on the dollar is sustained since inflation figures came in lower than expected a month ago. He says this week's US inflation data could affirm the buyers. Bhaskar says the dollar INR pair has rallied on demand pressure but is hovering below the 83 to a dollar mark, and this may not be breached if oil prices also remain lower. He expects the dollar INR pair to trade in a range of between 82.45 to 82.65 to a dollar for the day.
And on the bonds, Bhaskar Panda says that Indian CPI inflation print was encouraging as it came in lower than expectations, but IIP disappointed, and he has a range in the 10-year benchmark bond yield at about 7.2 to 7.3%.
Well, we've got plenty of stock-specific action, and we'll get to that in just a bit. We have Kotak Mahindra Bank, Land Pharma, Godrej Agrovet, Tata Motors, GR Infra Projects. Well, they are all stocks on the back of positive news flow. Add to the list KEC International, Route Mobile, ONGC, and Oil India. Just one stock could react to negative news flow. That's Ethos.
Okay, so lots to track in terms of specific stocks as well. Gary Schlossberg is Global Strategist at Wells Fargo Investment Institute. Gary, great to have you with us here. Thanks very much. Do you believe the next 48 hours with the US CPI number and the FOMC decision after that could be pivotal for markets? And which side are you leaning on?
Well, I think it could be pivotal for markets in the near term. Longer as we extend into 2023, there still is the issue of the earnings outlook, as you mentioned earlier. I think the street is still a little high in their earnings estimate. We are below consensus, and we still think there has to be an adjustment there as the economy goes through an economic slowdown. But for now, at least, if we can get a CPI in the U.S. that's somewhere between that around that 7.3% year-over-year rate that the market is anticipating, I think we can build on the increases in the market, the rally in the market that we've seen of late. If that CPI comes in year-over-year higher than expected, anywhere in that 7.3 to about 7.7% range, which is where we were in October, we could see the market begin to sell off, at least for a time.
India is a very different beast, right, Gary? Because we are now seeing inflation come off as well. The macro situation in India is improving and we've been hitting all-time highs. Do you think irrespective of the global macro situation, India will continue to chug along on the upside?
Well, I think if there is a sell-off in the U.S. market and some of the other major markets in sympathy with that, the Indian market could get caught up to some extent. But I think the slowdown will be buffered not only by good news on inflation coming within the RBC's target range, but RBI's target range, but the fact that we expect to see Indian economic growth, even as it slows next year, hold up reasonably well compared to what's going on overseas.
All right. Hi, Gary. Morning. I wanted to ask you about the toss-up between India as well as China. How is that playing out?
Well, I still think India looks reasonably good over the next year compared to China. The good news for China is that they have lifted some of the COVID restrictions. The bad news is that the COVID infection rates continue to rise against a healthcare system that may not have the capacity to fully deal with the increases in infection rates that we expect to see. So any benefit that we expect to see to the economy from a more liberal COVID policy could be offset by households holding back a bit, afraid to get out there and shop, to spend. And on top of that, China has some other issues as well with their property market and with the overseas market, which is weighing on exports. When you put all that together, I think all in all, India continues to look better over the next year compared to the Chinese market, even as the Chinese economy recovers to a moderate extent.
Gary, that earnings point that you made, I think you were alluding to that call from Morgan Stanley about earnings recession. In the last, 15 years or so, whenever we've had a recession, it's been deflationary, right? Take the 2008, which was the big one, of course. But no, I don't think anyone, or I don't know if you do, expects inflation to come off to 2% in 23. Maybe it'll come down a little bit. It drops to say 3%, 3.5% by the end of the year, so average of 5%. Is there a difference between a recession with still inflation reasonably okay, as opposed to a recession in a deflationary environment? Because recession with deflation is earnings contraction, whereas if you don't believe that, then earnings may not fall very much. They may not grow, but they may not fall very much. Any thoughts?
Yeah, I think to a point, if we do get inflation falling, and I might add that we are in that optimistic camp. We do see inflation falling down perhaps below 3% by the end of next year. There are several reasons for that. But to your point, if inflation doesn't come down that rapidly, and pricing power behind that continues to hold up reasonably well, and it's really more of a cost phenomenon where we get inflation coming off further up the pipeline, clearly margins won't be hit quite as hard. And if the recession is as moderate as we think it will be, that could be good news for corporate earnings. But even with that, we think that the earnings outlook, as laid out by the consensus, the kind of decline that we may expect to see in the consensus is still a bit moderate. We would look for a more more of a sharper slowdown in earnings, in part because our inflation outlook is more sanguine. We do have inflation falling to about 2.5%, perhaps even lower than that by the end of next year.
Okay, so finally, to sum it up for an Indian viewer, if you're saying that India is better than China on one hand and India is also doing well on its own, does India top the charts in terms of emerging markets for you, at least in 2023?
Well, our view on emerging markets is cautionary next year. We do think there will be more dispersion, especially as the global economy recovers. But for next year, we continue to focus on the U.S. market. Out beyond that, as the global economy recovers, we think India is still pretty well placed, even though valuations aren't as cheap as they are elsewhere, pretty well placed to do reasonably well in that global economic recovery with a renewed focus on the emerging market space.
Gary, great to have you with us here on CNBC as always. Appreciate your time here as well. So that's Gary Strasberg with Wells Fargo. Sonia, just a point on that inflation number here in India that you were referring to. It's all vegetables and tomatoes specifically, right? So inflation is the CPI number which came out yesterday is lower than expected, but it's a 50 basis point miss as compared to what the street was expecting. Yes. But it's all vegetables, and as I said, tomatoes. The core number is still largely in line. Yeah. So you take that and you take the IP, the industrial production number, which is a shocker, right? I mean, I think that fell 4% in the month of October, although this is lagging data. Yeah. But it's quite something. November was a festive month, and you would imagine that industries produce in anticipation of demand, which will come in the next month, and that was down 4% IP. So you got, I mean, if you look at the core number, which has not moved that much, and you've got industrial production, which has come off quite sharply. I mean, it's a tricky kind of a picture, right?
It is.
So I think that's and of course this has got implication for the currency as well, because I mean, if there are many ways to kind of look at this particular data. If you believe the headline number is coming off, and that is what the RBI will look, if the US inflation number does not cool as well, that actually puts your currency defense on a bit of a back foot, because you don't need to do very much. Whereas if the US inflation number is hotter than expected, I mean they will do more, putting more pressure on the currency. So I mean, as I said, many ways to look at this. We'll try and sort of discuss this more as we go along. But I think this is on a headline level good, but more needs to be said, more needs to be kind of sort of looked at in greater detail as we kind of go along. We'll take a quick break here. Our list of stocks lined up with our research team when we return in just a bit from now.
देश का हर अरमान पूरा करे एक नाम श्री राम श्री राम होना उगाना कारोबार चलाना हंसाना मनाना वादे निभाना कोची मोहाली राजौरी वाराणसी मुंबई पन्ना शिमला बड़ौदा श्री राम के साथ आगे बढ़ना श्री राम फाइनेंस लिमिटेड आपकी प्रगति का साथी.
Everything we do has an impact on the climate. But how can we transform that from a negative into a positive?
The whole essence of creating Petronas was really to create that positive social impact.
I've been out to the rainforest and seen some of the work they're doing there. We're going in the right direction.
It's about working together to deliver sustainable impact.
वाह, अब आ रहे हो इंस्पेक्शन के लिए? 3 घंटे पहले बोला था कि मैम बस 2 मिनट में पहुंच रहा हूँ. इस कार इंश्योरेंस के चक्कर में पूरा दिन वेस्ट. चलो अभी प्लीज चेक करो.
मैडम मैं प्लम्बर हूँ.
प्लम्बर आया क्या? आने दे.
सर कहाँ हो?
मैडम बस 2 मिनट
कार इंश्योरेंस चाहिए without waiting for inspection? Upload photo, renew instantly on PhonePe. Tension-free insurance.
Avance Holding Limited, a globally diversified financial services company with offices in 6 countries, launches its IPO compromising of fresh equity and offer for sale. Public issue opens on 12 December 2022. Public issue closes on 15 December 2022. For risk factors and other details, refer to the RHP. Available on the websites of the company, SEBI and the BRLM.
क्या हुआ चैंपियन?
दिन रात प्रैक्टिस करनी पड़ती है। यहाँ तो रात को स्टेडियम ही बंद हो जाता है।
एक काम करो ना, चेन छोड़ छोड़ के लगाना।
पापा?
अब करो दिन रात प्रैक्टिस। चैंपियन।
एक्स्ट्रा सेफ पॉलीकैप ग्रीन वायर आपके सपनों को रखे सेफ।
Your health is our concern. Choose network or appropriate hospital. Our telemedicine and customer care team are available to guide you. Star Health Insurance, always at your doorstep.
Welcome back. We begin the day with positive cues. The SGX Nifty is up about 30 odd points and there are plenty of stocks to talk about. So without wasting any time, let's get straight to it. First up, we have Abhishek joining in. There's the Kotak Bank FinTech IPO. So he's going to tell us a little about that. Abhishek, over to you.
Well, Sonia, to begin with, it's a money control exclusive story. So sources do tell them that KFinTech may launch an IPO on 19th of December. It's a tech-driven financial services platform, especially for the asset managers or the AMCs. So it will be an offer for sale of about 1,500 crore. The valuation that is being done is a market cap of around 6,300 crores. So the promoter, that is General Atlantic, that will be the only shareholder who will be selling stake via the IPO. ICICI Securities, Kotak Mahindra Capital, Jefferies, IFL Securities and JP Morgan, these are the investment bankers to the IPO. Kotak Mahindra Bank is also an investor in the company. It bought a 10% stake at around 310 crore last year. So that if the IPO is launched, may see the doubling of, the gains over there. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, hopping across to Bahista, she's joining to tell us about some other stocks that are in the news. Morning, Vaista.
Good morning, Nigel. Let me start with Gland Pharma. This is an ET story, not been independently verified by CNBC-TV18. Advent International, bearing private equity Asia, Bain Capital, Blackstone, KKR have been approached to buy the Fosun-owned Gland Pharma, which could possibly be amongst the largest pharmaceutical deals in India. Fosun Pharmaceutical Group is the controlling shareholder of Gland Pharma with 57.86% stake, and the deal could be approximately $3.5 billion. Moving on to Godrej Agrovet, which has entered into 2 sale deeds for the transfer of the total land, which is measuring approximately 3.9 acres, which is situated in Tamil Nadu, and the names of parties with whom the agreement has been entered. One has been Godrej and Boyce, and the other is Minerva Veritas Data Center. And the last stock that I'll be talking about is Tata Motors, which is looking at a possible divestment of the company's investment in Tata Technologies, which is its subsidiary. This is through an IPO route. Back to you.
Okay, thanks a lot for that. Well, Vivek is with us. He has some more stocks in the news as well. Vivek, over to you.
Well, good morning. Quite a few stocks on our radar. First on our list is GR Infra Projects. The company has gone ahead and sold its entire stake in one of its subsidiaries, GR Highways Investment Managers. This is to a company called Lokesh Builders, and the value is around 15 crore. The other one on our radar, KC International, the company has updated the exchanges about quite a few order wins that it has received. So total order wins worth almost 1,350 crore across various verticals, including the T&D business, the civil business, as well as the cables business, where it has received orders. Also keep an eye out for Route Mobile, an interesting development coming in there. The company's subsidiary is gone and entered into a pact with Uganda Telecom, and Uganda Telecom has appointed the company as their exclusive SMS firewall as well as gateway partner. And lastly, keep an eye out for Ethos as well. Now, promoter entities have been continuing to pare their stake in the company. Yashovardhan Sabu has further reduced his shareholding, and another promoter entity, Dream Digital Technology 2, has completely exited their 0.27% stake in the company.
All right, Vivek, thanks very much for that. Now, oil prices have made a bit of a bounce. They jumped. Manisha is here to tell us why and where are prices now. Manisha, hi, morning.
Morning, Prashant. Thank you. Well, yeah, 3% of a gain overnight, and this is after 10% of a decline in the previous week. The crude oil prices continue to be as volatile. But the support overnight comes in from the fact that the Canada Keystone pipeline to the U.S. Gulf Coast still remains shut for a second straight week. Keystone, remembers, carries 0.6 million barrels per day of heavy crude from Canada to the U.S. refiners. The second point is about Russia continuing to threat to cut production in retaliation to price caps. And the third factor is the China reopening and supply disruptions. That seems to be supporting as well. Markets will watch out for the U.S. inflation data today, the U.S. Fed rate decision. You also have monetary policies from the Bank of England and European Central Bank. So it's going to be quite volatile week for crude oil there. But the markets do believe that we are headed higher from here, and we may have seen a near bottom come in for crude.
Okay, all right, Manisha, thanks a lot for that. Well, here's a quick recap in case you missed out on any of the stocks with positive news flow. There's Kotak Mahindra Bank, there's Gland Pharma, Godrej Agrovet, Tata Motors, GR Infra Projects, and well, KC International, Route Mobile, ONGC, Oil India, and the only stock that's in the red today, or expected to be in the red with negative news flow, is Ethos.
Okay, all right. Well, retail inflation, that came out yesterday, that came in at around 5.8% odd. We also had the IIP number that came in. Lata joins us to explain both these two data points for us. Morning, Lata.
Well, very important that on a day when Parliament was squabbling on why the RBI's note is not being shown to them on the 9-month or 10 months in a row, inflation not meeting target, inflation indeed met target, or at least came within the comfort zone of 5.88. But the even better news is what it was versus the poll. 50 basis points below the poll. Polls were about between 6.3 and 6.4. The big fall actually came from food. Food was expected to come in at 5.8. It came at 4.67. Huge fall, and almost entirely due to vegetables. Now, that is the good and the bad news. Vegetables down 8%, even on the month. It's down about 8%. So it was huge. If you looked at the other food items, cereals, milk, they're all up 1% month on month. So that explains the fear. Core inflation, which is, your services, household services, health, education, that one is still sticky. That is the core at 6.1. Some people put it at even 6.2. Now, this is something you can't import. So that is the Reserve Bank's dilemma now. The erratic one, vegetables, is falling, but this one that you can't control, core, is at 6.1. So it may have to persist with rate hikes. And on the other side, growth is a pathetic picture. At -4, I mean, it's a 26-month low as far as output is concerned, industrial output is concerned. And big elements like consumer durables and consumer non-durables are down -13 and -15. I mean, this is really huge. Industrial IIP is at the best of times a slightly volatile and probably not much relied upon number. But, you can't shut your eyes to this kind of a cut in manufacturing, -5.6. So I think people will work over their growth figures if this repeats.
All right. Thanks very much, Lata. That's a good perspective on both the inflation number, headline lower, but core steady, and of course growth, which came in as a bit of a shocker, but that's for October. We'll take a quick break here. Up next, Deepan Mehta of Elixir Equities will be with us for some fundamental stock analysis. We'll also have Rakesh Arora of GoIndiaStock.com and Rajesh Ravi of HDFC Securities. The news broke yesterday during market hours that Dalmia Bharat is acquiring the cement, clinker and power assets from Jayaprakash Associates for over 5,600 crore rupees. Stay tuned. Those conversations coming up. Okay, welcome back. We've got, 30 minutes to go for the pre-open session. And Deepan Mehta is now joining us, Director at Elixir Equities. Deepan, great to have you with us here. Thanks very much. Once again, the flavor of the market yesterday was in PSU banks, right? Even the laggards are catching up on how. I mean, I was looking at Punjab and Sindh Bank. Old name, but 80% this month. It's caught up with what others like Union Bank, IOB, PNB, Bank of India, and these were all big gainers yesterday. So it's got momentum with it, and it's got the prospect of earnings improvement as well. What would you do, and which names do you like?
Yeah, good morning, Prashant, and thank you for having me on your show. I think we are seeing a very good trading rally in PSU banks. And I had said earlier as well that I think the next 6 weeks or so is exceptionally good for PSU banks. They should report very good numbers for the December quarter. And this entire process of expansion of their price to earning, price to book multiple, that is well underway and maybe has some more legs to go up as well. So generally positive, but remember it's a trading rally. And at some point of time, once investors realize that growth may not be as much as the private sector banks, and once the NPA cycle starts to pick up, you may see trouble spots emerging over there. But for the time being, I think next few weeks, months looks very good and exciting for PSU banks. And you can buy any of them. I think they more or less move in sync. And even the valuation ratios are in a very narrow band. And one bank is not in any case significantly better or worse than the other one. They are more or less the same type of structure, as well as same type of lending standards or NPAs or growth rates as well. So I think if you're holding PSU banks, then this is a great time to remain invested. And you could look at some of the smaller PSU banks, like you mentioned, Punjab and Sind Bank, maybe Union Bank of India, which are even on the cheaper side as compared to some of the larger PSU banks.
Okay. Dipan, hi, good morning. I wanted your thoughts on Paytm. There's the buyback board meeting today. So from an investor standpoint, what does one expect and how are you looking at the stock now?
Good morning, Sonia. I think we are seeing positive news flow coming through from Paytm time and again. And it's not just the buyback, but the operating numbers also, which they disclosed for the last month, were exceptionally strong. And clearly, I think we have a tangible bottom in place for Paytm. And the buyback certainly will strengthen this particular support zone, which it is at present. And it's a smart move on the part of the management, given that they have the liquidity. It's sending the right signal to all the investors that cash burn may not be as much as they're expecting. The fact that they're utilizing the money to buy their own stock. And also, I think it sends a very good, I would say, impression that they are now really focusing on their capital allocation policies. And you will not expect them to do any wayward merger acquisition or spend excessively on any particular feature or any particular business which may lead to losses. So I think it's gradually becoming a more and more responsible and investor-friendly company, and I think the street welcomes that, and certainly you'll get rewarded in terms of better returns going forward.
Okay, all right. Hi, Dipan. Morning. I wanted to ask you about Tata Motors. They're saying they're going to be divesting their stake in Tata Technologies. So that's good news, right? Some money will come in. What's your view on the stock, Tata Motors?
No, I'm not interested in Tata Motors. I'm interested in Tata Technologies. And looking forward to the IPO. Hopefully, it'll be at a reasonable valuation because it'll be compared to some of the other IT companies which are trading at reasonable valuations. And I don't know much about the company, but the fact that the Tatas have kept it separate, standalone, and not merged with TCS, as they are done with Tata Elxsi, I think it should have an excellent business model and should be focused on certain very exciting verticals where there is a good growth momentum. So if the valuations are reasonable, I think minority shareholders will have a good opportunity to invest into a good quality software company where it is assured of captive business.
Okay, so we'll wait by for that. But Dipan, you're not interested in Tata Motors, not interested in autos at all, or only Tata Motors?
No, we are very positive on all the four-wheelers.
Okay.
Right from Ashok Leyland to Maruti, M&M, and in two-wheeler space, we've spoken about Eicher Motors considerably. It's just that when you buy Tata Motors, the whole complexity of managing your portfolio increases significantly. There are just so many moving parts and so much of analysis and study and watch which has to be kept when you buy Tata Motors that it drains you. It takes up a lot of time in terms of monitoring other stocks. So that's the reason why we avoid Tata Motors completely. There's Jaguar, and then there is the EV space, and there's commercial vehicle and local passenger vehicle, and then there's the financing business. So it's a very complicated company, and its accounting policies also have come under fire in the past in terms of its hedging. And even in Jaguar, it is operating in so many markets with very diverse volume trends. So end of the day, when you have simple, nice, clean businesses to invest in the auto sector, I think our preference should be for that rather than Tata Motors.
Got it. All right, Dipan. The other sector that's not met your fancy too much is the cement stocks, I think so. But we have to focus on a big corporate story that broke yesterday. So Dipan, we'll come back to you. But getting to that, late in trade yesterday, Dalmia Bharat, they have acquired the cement, clinker and power plants of JP Associates for roughly around 5,650 crore rupees. Dalmia Bharat stock, well, it reacted positively in trade yesterday because now their capacity will be going up by close to around 10 million tons. We have Rakesh Arora, founder of GoIndiaStocks.com, as well as Rajesh Ravi, institutional research analyst at HDFC Securities, who joins in. Hi, Rajesh and Rakesh. Good morning, and thanks so much for joining in. Well, Rajesh, let's come across to you first. The deal looks attractive. Everyone's saying it's a good deal. Could you tell us how much of capex are you factoring in that they have to spend to get this plant up and running?
Hi, good morning. So, if we see the operating numbers of the JP assets till FY19, at least the 5.5 odd million ton, which is in the standalone books, we're operating at 85% utilization. Okay, and last 2 to 3 years, the utilization has come off to 45%. We don't have data for the remaining 4 million ton, which is under the associates and the subsidiaries. So that is one. The assets have been operational, and we don't see major challenges other than working capital and re-onboarding the distribution network uh, to get the assets up and running. The incremental capex, which and obviously some of the cost improvement exercises may come through. Second is the JP Super Assets, which was earlier so far been part of Ultratech acquisition, but because of the lack of forest clearance, this plant has not been started off. So
yes,
we are yet to get any number of what sort of capex would be needed to get this plant up and running.
Okay. Well, Rakesh Arora is also with us. Rakesh, what does this mean for the industry dynamics? Now, Dalmia will expand its footprint into the central India region, will become another big player there. What does this mean for the industry as well as for some of the listed players?
So, Sonia, before that, I just want to spend a few minutes on the deal. Remember that this deal has been rejected by Ultratech, Shree, and even Adani's. So, there's a lot of slip between the cup and the lip. So let's see how this deal goes through, first of all. Number two is that, while the deal is very attractive from a medium-term perspective, because it gives Dalmia access to central India, where limestone availability is not that great, and it is one of the fastest growing regions. So from that aspect, if the deal does go through, it is positive. Number three is that from an industry dynamic, obviously India is growing at around 7-8%. So, each and every major cement company is trying to capture a piece of that. And there's enough space for, everyone.
Okay.
So if Dalmia is talking about 100 odd million ton in the next 10, 11 years, it's no big deal because they would be reaching 45, 46 million ton, capacity, including this acquisition. And every year they need to add 4 to 5 million just to keep their market share. So, these numbers look big, but, India is becoming big in terms of cement consumption. So I won't really get worried about anything.
Right. Rakesh, sorry, just to, you said slip between the cup and the lip. Is there a slip to be expected? And you said if this deal goes through?
Yeah, so Prashant, the deal is lucratively valued. So clearly, there should have been competition. And if others have rejected it, there has to be some reasons. Now, we have to try and dig out what could be the reasons. One that I can think of is probably creditors have to give a clean chit. So, because that was one of the reasons why one of the contenders left the deal. Number two is, what is the quality and availability of limestone at Riva plant, which is the main plant, which is currently around 3.3 million ton capacity of clinker. It's a very old plant. So how much clinker is still left, how much limestone is still left there is yet to be seen. And if I look at the history of acquisitions which Dalmia has done, whether it was Murli Industries or it was Kalyanpur Cement, they've been buying some iffy assets. So they're not like best assets, and there are issues with those assets. In most of the cases, limestone is, missing. So I would take it with a pinch of salt. It looks like a good deal, but, there are ifs and buts.
Okay, all right. Rajesh, what do you think? Can the deal fall through? Even I've, tried to touch base with the management. We're hoping that they join on the channel. There are, various aspects. One is they have that JV with SAIL. So that 26% is still with them for one of their assets. The limestone availability could be a question mark. And the clinker unit earlier was bought by Ultratech, but that environment clearance didn't come about. Is there a possibility the deal falls through?
So, as you rightly said, and Rakesh also pointed out, there are a few critical challenges which this deal need to sail through. And obviously, SAIL is one of them. And then the JP Super, the forest clearance, under Ultratech, 6-7 years, they have not been able to manage to get it. So obviously, that is a big pain area, and then the other creditors and the other stakeholders. So because this is a binding agreement, and what the management is clear that only when they get through all the pieces, this deal would go through. And as I said, on a plain basis, on a plain vanilla basis, the deal is appearing at $66-67. Even if we factor in some good amount of capex, this would still be at sub $100. So from that perspective, for Dalmias, it make much more sense, because having their own greenfield project in the central market would have taken at least 5 to 7 years before they could have a meaningful footprint, whereas this could give them at least a 5 million ton sales footprint within 2 years of acquisitions. So from that perspective, at sub $100, this is a good opportunity for Dalmia.
Okay, this is a good opportunity for Dalmia. Rajesh, just wanted to ask you, when new players come on board, when there is a little more competition, the prices also start to fall. Are you looking at that? And if yes, what do you think the impact of this would be on the other players?
Right. So indeed, that is a question whenever a new entrant is there in the market. But JP is already an old brand in the central market, and it is already a selling brand. You know, it is operating at 45% utilization. So, and from 45 going back to 80 will at least take 2 to 3 years, because the whole distribution network is just most of the distributors are away, so they'll have to again brought on board. So the ramp up would be gradual, and I don't see that will have a meaningful impact for the other incumbents in the market.
Okay. All right. Rakesh, I wanted to ask you your view. You said, why did the other larger names bid, which is a question mark? There could be, various reasons. But what if the Adani Group, that's ACC and Ambuja, they decide to start expanding organically? Will you see that as a negative? I mean, all this talk of consolidation suddenly goes out of the window. Will that be a bit of a derating event for the industry?
No, so Nigel, you have to say that all these companies would try to gain market share, and they will be announcing big capex, but that doesn't mean that they will be producing and selling that much. So this selling discipline is going to be very different from capacity creation.
Okay.
Take for example even Dalmia, it's operating at 61% capacity utilization. So these big numbers really don't mean. So when they are saying 9.4 million ton cement capacity, if they can sell even 4 million in next 2 years, that will be a great achievement. So that's less than 45-50% capacity utilization.
Okay, gentlemen, thanks a lot for joining in. Let's see the follow-up there. Dalmia Bharat, in any case, the stock is up about 15% in the last 1 month. So let's see what day one looks like post that acquisition. But let's take a quick break. On the other side of the break, we will be joined by Mitesh Thakkar and Sudarshan Sukhani for some technical stock analysis. Do stay tuned in. Welcome back. The SGX Nifty now up about 35 odd points. So going to be a decent start. Mitesh Thakkar and Sudarshan Sukhani are joining in. Gentlemen, morning to both of you. Sudarshan, considering there's a big event later tomorrow and there's the US CPI data as well, you think one should be in wait and watch mode, or would you go long today?
Good morning, Sonia. Well, for optimists like me, today is a good day to go long. We waited yesterday for markets to find some, support, and that eventually happened in the morning itself. So today, after the markets open and given, let's say, give a few minutes for markets to become stable, I would go long in the Nifty as well as in the Bank Nifty. Traders can choose between the two. I usually prefer the Nifty simply because it is more broad-based. But the trade is to go long, keep a 100-point stop loss from your entry price. That is just in case. But I think we'll see a good day today and maybe for the first half tomorrow.
Okay, all right. Good day today is what Sudarshan is bracing for. So let's see whether or not we get that. Mitesh, morning. What about you?
Good morning, Nigel. See, I think between the two indices, what interests me is Bank Nifty. I think 44,400 is something which the Bank Nifty can do. And on the Nifty, I still believe that we are in consolidation, so we'll avoid that. But yeah, I think, in case you don't get a very strong or very big gap up opening, I think the Bank Nifty would be the instrument I would want to trade. Keep a stop loss just around levels of 43,500 or just below it. And 44,400 will be the first target on the upside.
How about individual stocks? What are we looking at this morning? Sudarshan, let me start with you.
Well, Coal India is a buying opportunity. The stock is consolidating sideways for a month, and it's on the verge of what I hope is a breakout on the upside. So consider buying that with a stop under 228. Laura Slabs is my only intraday short. That's in a mini bear market of its own for reasons which, of course, I wouldn't understand. But that's an intraday short with a stop above 413. Z Entertainment is a buying opportunity again. The stock is giving a sense that maybe a bullish pattern is under development. It's not complete, but it's a risk, but it's worth taking that risk with a stop under 255. And ACC is a buy. I heard you talk about a lot of cement companies. So ACC is an opportunity to buy with a stop under 2570.
Mitesh.
Okay, all right. Mitesh, what about you? What are the individual stocks you're looking at?
I've got all buy calls today. Despite the fact that the market view is not very optimistic, a lot of stocks are showing good traction, and that's what I've tried to pick. Nestle is a buy with a stop at 20,275, targets of 20,950 here. BPCL and the entire OMC pack had some kind of a breakout yesterday. BPCL is a buy with a stop at 342 for targets of 365. A buy on Apollo Tires with a stop at 318 for targets of 335, and a buy on HDFC Life with a stop below 570 for targets of 590.
Okay. All right. Thanks a lot for that. So those are some ideas on the technical side. But Dipan Mehta is still with us, so let's get some calls going over there as well. Dipan, I wanted your thoughts on Colgate, because today there is an analyst meet, and this will be the first time that the new CEO, Prabha Narasimhan, will be addressing analysts. So I guess, there'll be some important data points from there. But on the entire consumption piece and on Colgate in particular, your thoughts?
No, Sonia, we're not very positive on Colgate, and it's lagged even some of its MNC peer groups like Nestle and HUL. And that's more to do with the fact that the parent company does not have the kind of repertoire of products which these companies have. So end of the day, it's a one-trick pony, and it's facing intense competition in the toothpaste business. And overall, also that particular segment in the FMCG space is very, very mature. So I think every rally in Colgate-Palmolive is a good opportunity to exit. There are many loyal shareholders in Colgate-Palmolive who are stuck, and the stock has already gone nowhere for the past several years or so. So I would say that this is a good time to exit out of the company. The new FMCG or the new consumer plays are in retail, are in QSR, building material, appliances. I think that's where the real consumption growth is going to come through. And FMCG, I think, will just be a tepid 8% type of a volume growth with low double-digit earnings growth, which is not really, not really make a lot of money going ahead or so, or any wealth creation for that matter. But I think it will at least retain value if that's the objective of the investor.
Let's just put up the stock price of Jayaprakash Associates. I mean, it's a sort of low value stock, and it's also, of course, involved in this Dalmia deal. Now, implications of what Rakesh Arora told us in terms of there being a question mark whether this deal actually goes through, and so that, of course, if it does not, then this completely changes. But the stock was up 10% yesterday. If it goes through, it's good news because the company gets money. But the fact is that JP has got, it's kind of sort of stuck itself in more than one pickle. The big issue for Jayaprakash is another case, which is in Uttar Pradesh, which is the Yamuna Expressway case. So if you remember, a few years ago, Jayaprakash struck a deal with lenders in which they agreed to pay a large sum of money and, land to lenders. What has basically happened is the Yamuna Expressway Authority has cancelled Jayaprakash's sort of claim on the land itself for non-repayment of dues. That case went to court, and it's kind of stuck in a limbo. I think there was a hearing this week. We'll kind of try and get details on this one. But the point is there is more than one issue here, which one has to take cognizance of before you get all excited about what this could do for Jayaprakash. I mean, the deal going through consummation, of course, does mean money coming in, but there are more than one issue. So 11.75 on JP. Yesterday, of course, was another very large day for mid-caps, Deepan. So just a few names. I don't know if you have any views on any of these. There was Reddington, which was up very sharply. Viatec Vabag, we saw very large moves. The rail names, IRFC, RVNL moved quite a bit. Any thoughts on any of these?
See, I think Viatec Vabag is, finally playing up to its potential. The company has been around for many, many years. and they've had decent order book, good capabilities, but the financials never came through for some reason or the other. Some project would get stuck, some delays, or some other reason or the other. But now I think we are seeing the company really deliver on its potential, and that's very positive. Valuations are reasonable. We are seeing a very decent upswing in the capex cycle, and that's very positive for VA Tech Babak. And water is a key area for state governments as well as central governments all over the world. And this company specializes in water projects, so that's very positive. And I think the railway-related stocks have anyway been doing well, and it's only been a pause. And now again, we are seeing the rekindling of interest coming through over there. All of these companies are good in terms of expansion of valuation ratios. And given the earning visibility, we can expect good earnings growth as well over the next 2-3 years or so. So it's a nice, safe, secular, steady investment theme to bet on.
Okay, well, let's do one thing. Let's go to Vivek now. He's standing by to talk about the Momentumizer segment. And this is one stock that perhaps could see some momentum or has seen momentum. Vivek, over to you.
Well, good morning. You know, the stock that's caught our eye is a company by the name of VIP Clothing, which was earlier known as Maxwell Industries. You know, first, just have a look at the price action. Now, this particular stock is up for 8 straight sessions, and just in the month of December, it's up almost 35% and almost more than double as far as the last year is concerned. And, you know, technically, too, this stock is trading above all of the key 50, 100 as well as 200 DMAs. Now, you know, what is it that's triggered this particular rally? The recent news flow, you know, that's come in as on December 9 has been the fact that, you know, the company has gone ahead and issued convertible warrants, 1.5 crore convertible warrants, with the base price or the warrant conversion price kept at 42 crores a share. Now, the warrants are being given on a preferential basis to the promoter as well as marquee investor Shankar Sharma, who's participating in this. And this also, you know, has triggered a bit of the rally. Now, apart from that, you know, having a look at the company and what exactly is it that the company does, clearly, you know, it's a large name as far as the innerwear space is concerned. And also, some recent newspaper reports have indicated that the company is looking to enter into a newer category, which is the leisure as well as athletic wear categories. We have not independently verified these reports, but despite that, this particular stock has been on a tear the last couple of trading sessions.
All right, thanks a lot for that, Vivek. Well, on that note, though, we'll slip into a short break. You come back, we'll get straight to pre-opening rates. Later on, we'll also connect with Samir Bisse, banking research analyst at JM Financial Institutions, to discuss about the Paytm as well as a couple of PSU stocks. Stay with us.